Hello, hello, hello. Welcome to Stock Trades. Mic check 1, 2, 3. Hopefully you guys can hear me. It's a pleasure to be on. I'm very excited to basically talk to you guys about the NVIDIA stock. This is one of them companies that we've been looking at for quite some time. This is going to be a pretty technical video. There's going to be a lot to it. But if you're here just for the short, just like what's cut to the chase, the price target, we went ahead and calculated a price target of $700 for the NVIDIA stock. Now, most folks just take that and run, but there's more to it than just the number, right? There's more to it than just the number. So we're going to go ahead and we're going to do some just massaging and just to kind of get into the situation. So in terms of the NVIDIA stock, it's a semiconductor chip play. It's one of those companies that I believe has shown some tremendous growth. I'm going to show some... I'm going to respond to the comments once I get into this video here really quickly when we take like a little break. But overall, if you look at the NVIDIA here, if we go to the income statement real quick, you go to the income statement, and I want us to just kind of zoom in right over here. Q1 of 2023, you could see that NVIDIA had around $7 billion in comparison to Q1 of 2022. You could see that, the revenue was going down. But then all of a sudden, they went ahead and increased guidance, and they bumped up their guidance to $13.5 billion. So that's why you've seen a change in the stock price. Wall Street just didn't have time to adapt in the revenue growth. So you could see how it just literally increased. But the question is, okay, well, they grow their revenues, but what about their bottom line, right? So we go in and go to the bottom line, and you can see... let me just highlight it for you guys so you can see a little better there. If you could go here, you could see the bottom line went from Q1 of $2 billion to $6 billion. So their bottom line increased to a frequency that has not been seen in the company. You go over to their cash flow, and obviously, we already talked about the net income. Let's zoom in a little bit here on the free cash flow. You can see the free cash flow jump from $2.6 billion to around $6 billion. And then again, I just want to first off apologize for my videos. My apologies that, they don't have great transition points. And I used to have, if you remember the beginning of our stock trades, I had a little bit more time to edit the videos, to make them look good for you guys, to make sure. But again, let's be quite honest, like, do you want a video to look good, or do you want the information to be good? It's all about quality, I would say. So, my apologies for my videos, but they're going to, most likely be in podcast format like this. And I feel like they're very informative that way, because I'm not focusing time on editing, while I can basically focus time on giving you guys my thoughts, right? So going back really quickly here. So you could see there was a big spike in the free cash flow, which essentially what brought kind of the fusion frenzy of NVIDIA. Everyone just started piling in on it. So going back really quickly here to the NVIDIA stock for Stock Talk, we do have a sample price target for NVIDIA. Again, this is on our website. This is a free sample video. We went ahead, if you go to allstocktrades.com, we went ahead and we've been talking about NVIDIA since it was $100 stock. And I've known NVIDIA even before that because, we established Al Stock Trades in around, I think, 2021, 2020. But, we calculated the value of the company and it hit our price target. So we're going to talk about why we are increasing the price target. But overall, basically what you can see here, we're going to be using the shares outstanding of 2.4 billion shares for our intrinsic value calculation. And pretty much in terms of the revenue growth or like the growth that we're going to expect from the company, if you look at the analyst projections, which I don't like to look at, you look at 2024 to 2025, they're expected to grow anywhere between 65 to 37%. If you take the halfway point of that, it's around 51. Let's just do it right in front of you guys here. 37.3 plus 65. It's 102.3 divided by 2. We're looking at 51.15, right? 51.15. That's going to be the growth rate. So that's the growth rate we're going to be using. and we're going to do the math right now and show you, okay? Now, before we get to the math part, I wanted to just go ahead and give you some quantitative analysis really quickly. So this is organized in such a way, I know it looks overwhelming, but just forget the numbers for a sec and just look at the colors, okay? Red means bad and green means good. So if I were to ask you, where would you say the bad area is? Well, it kind of looks a little bit red, a lot more red in this area, wouldn't you say? So if you go down here and you go down to 2015 to 2016, you can see that the stock really wasn't, I wouldn't say doing that well, but it was having a hard time. And if you look at, if you were to calculate the value of the company, which we did in the NVDA master video, the Mastering Stock Market, which is free now on our stock trades to show you that what we preach actually works. But if you were to look at 2015 and 2016 on the stock price, look what you get. 25, let's go here. 2015, 2016, NVIDIA was hovering around $4 or $5. You can see once it started to show promise and things started to become not red, you could see the stock price started shooting up to its fundamentals, right? That's the whole goal about doing an intrinsic value calculation. You're able to recognize a pattern. I understand that, 2016 was red and it was crap, and 2015 was red and crap, but you can see the numbers went from 4.8 to 8, right? Numbers like, hello. Let's do, just small little trend changes, $16 to $28. These are different metrics that we use, like the PE ratio, meaning that's starting to become more, PE is different. The PE ratio for every $28 invested, you expect $1 in return. But you could start seeing here, it went from yellow to green. It's the intelligent investor to pick out these subtle differences that will essentially allow you to buy what would look like crap at $4 and sell it when people realize it's worth. Another thing really quickly, in addition to our quantitative analysis, this is volume. You could look at the spikes, but just let's focus on the simple moving averages really quickly. If you look at the NVIDIA right now, it's hovering over the 20 SMA, and it seems as the 20 SMA has been a great resistance pattern, simple moving average for NVIDIA, and then the 60 SMA has been the kind of the defender if things were to drop. So this kind of give you an analysis of where people are looking at in terms of prices. So let's go ahead and let's do the math for the NVIDIA company. We're going to go in and look at our intrinsic value calculation. If you want access to this, there'll be a link down below for you to learn more about it. But essentially, this is what I would be using it to evaluate NVIDIA, right? We fixed it so you don't have to scroll up and down now. You see the whole screen now. All right. So what I'm going to do is, like I said, from the calculation in terms of what analysts expect, analysts expect it, anywhere to grow in 2024, 65%, and then 2025, 37.3%. Okay. So let me go ahead and do 65% plus 37.3. Again, I take the halfway point, 102.3 divided by 2. Like I said, 51.15. So I'm going to put 51.15. Okay. So that's going to be my growth rate. My growth, I'm just going to these are my note sections. My growth rate is going to be 51.15. Okay. So I just remember it because I'm going to do some changes right now. In terms of the free cash flow, we're going to go ahead and use the free cash flow down here. So I'm just going to basically plug it and chug. It doesn't matter what year you put it in. It's going to end up taking the average, right? I'm going to end up replacing these numbers anyway. So we got 5101, and we know the free cash flow is actually more than 5101. I'm actually undervaluing it. The free cash flow changed, like I said, here. It changed from 2 billion to $6 billion, but we're still going to use kind of old numbers, the 5 billion, right? Just a little bit downward pressure on the price. Then we're going to just go ahead and copy. I'm just looking to the sheet of me here that shows me the free cash flow. I'm just going to take the last four again, because I've done the due diligence and I know that something within the company changed in 2016 and 2017. Again, watch the free video. You'll see. We're going to go 10 years into the future and discount back at a 10 to 15% discount rate, even a recession discount rate. And then we're going to go ahead and divide by the number of outstanding shares, which remember we said was 2.4 billion. So 2470. Again, these numbers are in millions. And then once you basically do this, you get a stock price of a bull case of $858.91, a base case of $565.90, a bear case of 397.88, and a recession case of 172.85. Now, again, I'm going to come back to this right now. I just want to give you kind of my thoughts on this. So you have to understand is when you do these intrinsic value calculations, what you're doing is you're saying that if this company is about to grow 51% for the next, some odd number of years, the thing is that's actually unrealistic for the company. But again, I purchased the company at a lower price, right? Lower price. We're talking so low, right? And the question is, I want to know when I want to sell it to the speculative investor and at what level I'm going to say, you know what? I'm out. Or I can just take half of my money and let the other one ride. An example would be, let's say Clover Health gets the whatever, 20, 25, 30, 40 bucks. I'm going to calculate the intrinsic value at whatever Clover Health is going to be basically growing at that time. And then I'm going to know when essentially to try to sell it in battling with the share dilution that they might do. We talked about it in our stock terminal group. You guys know what I'm talking about for our members. But with this case here, I want to know at what price am I going to basically hit the sell button? Now, am I buying at these prices? Absolutely not. Why would I buy NVIDIA when I'm happy with my prices, right? I just want to know, how much could my shares actually be worth in the stock market, right? So what I'm going to be looking at here is I took the halfway point between 855 and 565. So, 858 plus 565, which is 14,1423 divided by 2, which gives me $711. I rounded down a $700 price target. So that's when I'm going to be like, okay, you know what? I'm good, right? I'm pretty much good around $700, which is around, pretty much another doubling from that, right? So why do I think and I'm like confident that this is going to happen? Well, I think the semiconductor chip plays and the way the AI movement in the revolution is going to happen is we're in the beginning of an S-shaped curve. And I believe that NVIDIA is and will be the new Tesla, right? In terms of its growth. It needs to keep up with demand, right? Because the demand's so high that they need to start essentially how Elon Musk built factories, gigafactories. They need to start doing that and build out factories to supply the demand. Now, at what level do I want to essentially get NVIDIA at? Well, I mean, looking at these growth rates, you would have to redo a growth rate and just kind of very, very quickly, if we want to calculate that, we can do it the extremely conservative way, which we can look at the growth rate from 2014 to 2023, or just go from the growth rate of 2018 to 2023 here, and we could do that. So let's see. 2018, they had a net income of 3047, about $3 billion. 2023, net income of 4793. So that's about 9% growth rate. Let's see here, 2018. Make sure I get this right. And then let's do 2014. They had around 440. That's around a 30% growth rate. So we'll take the 10. Now, normally for these companies, they like to look at the revenue growth rate, but let's just be conservative. And instead of 50%, let's do 30%. So remember how I said 51.15. I want to sell at 700, right? But what am I comfortable buying at, right? So a 30% growth rate. So I'm comfortable getting anywhere between $100 to $210. Now, again, if you look at NVIDIA and if you look at the price, it actually went down to 120, even lower. It went down to 108, right? 100, let's say $112. So it went around right around between our bear and base case, which gave, if you followed the intrinsic value calculation and did the math, you're like, oh, wow, this is a great buy. And look at that. You just 3x your money. The question is, how far do you want to basically wait to sell? And that's an argument for, what the calculation we did for $700. Now, let's say, when would I go crazy? 25% growth rate. Whenever the stock goes anywhere between $75 to $102, I'm going to go psycho, right? I'm going to go insane, right? When we're talking prices that, we're here, right? I mean, look at that, So I hope that makes sense. And so now the question is, how long, would a normal, person hold from an intrinsic value calculation standpoint? Well, if you need the money in a year from now, 2 years from now, and you want to double your money, I'll give you a quote from Peter Lynch. Just take your $100 bill and fold it in half, double it, and put it in your wallet, right? The stock market's not for you. Don't invest, right? But my time horizon is anywhere between 10, 15, 20 years, right? I don't need this money for the next 10, right? I'm trying to build wealth. I'm not trying to use wealth, right? I'm focusing on my job and me being a future doctor to focus on that part of my life, right? In terms of my usage of my wealth, right? And even once I make, let's say, doctor money, I'm only going to be living 10, 20% off. I'm going to save 80%, right? 10 to 20%, I'm going to splurge. I'm going to ball out, but that 80% I'm going to save, right? So just kind of giving you an idea how to use these intrinsic value calculations, because you don't want to get stuck in the weeds and say, oh, it's under 700, I'm going to buy at 600. Warren Buffett likes to practice those things. But again, where is he going to put cash? He's kind of using Apple as a T-bill, right? And then another thing that this calculation did not include is the buybacks. So it's only that, the share price could only get higher, right? But let me just go ahead and go through the comments real quickly. Hopefully, if you guys have any questions, hopefully that makes sense. I know Irish, you had you had a question on the stock terminal. I hope that makes sense what I said. Let's see. Yeah, about the doctor. How do you make another video? Yeah, they work 24. Yeah, we have lives. You have lives. I just like finance, right? Perfect. Yeah, I got some clove. Hell yeah. All right. Well, yeah. All right, guys. Well, I guess no questions. I hope that was helpful, and I'll see you on the next one.